Hi traders, welcome back to another workshop. So we'll be talking a little bit about the mindset as well as mixing with some technical analysis as well. Let's talk about three key things that I know if a trader is going to be successful or not. So first thing, win big when you're correct and have the confidence to scale into a good position. So this is not something that I always promote in a group. I know a lot of times I tell all of you I'm entering a position or right there, getting out at a certain level, but some of you may not know my biggest winning positions come from having the ability, the confidence to actually scale into the position. So I'll give you a very good example. The main reason why I don't talk about scaling in a lot is because this is a very advanced topic. Some of you might say, hey, just adding more size, what's so difficult? If you are scaling in at a wrong price, at a wrong timing, or at a wrong size, it will ultimately affect the profitability of the position. Let's say if you have a position running on green right now, you wouldn't want to scale into the trade just to realize you're getting out for a loss. So that is the worst feeling ever, and it damages your mental capital. First thing, it damages your confidence. So I'll give you a very good example. So if let's say today you have a long position, after seeing that price reject the previous structure, you decided to took a position here, stop loss underneath, targeting above. Maybe your stop loss is about, for example, just take it as an example, 100 pips. Right, so price runs into favor. As price break through the previous high, guess what? You say, I want to scale in. Without having a proper scaling technique or without having a proper scaling system, you're scaling in at the worst price. So example, here you have about 10 lots. Then because you were so aggressive, you were so greedy, you were overconfident that you actually add another 10 lots right here. So let me ask all of you, what is the common question? What is the problem if you're adding an equal size scale in here? Your average price, all right? If let's assume you have 10 lots here at 119.59. You have another equal size scale in at 122.45. So what is your average entry price now? To divide should be somewhere in the midpoint. So that basically means for you, for your equity, for your P&L to actually go red, means from positive maybe 2.5 and 3R to actually go to zero, price only have to come back here. Why? That's because you actually doubled your size. That's why it gets easier to get stopped out and it gets easier to consume your entire profit. So let's see how it goes. Okay, so for example, it comes back down here, it goes to red, then you close the position. So one of my big rule is when I'm scaling into a position, I make sure I don't lose more than 1R. All right, so some of you may say, hey, last time I said that if you're scaling into a position, you shouldn't lose money on the trade. But sometimes I know when the setup, the quality of the setup is really good, I wouldn't mind going a little bit more aggressive. And that is one great thing about trading is you got to be flexible. There are times where a certain position I scale into the trade, realize that hey, the market is really not performing according to my expectation, and I immediately just shut off the scale in size and just leave the initial position there. So there's a lot of ways to actually trade the market. There's no fixed ABC formula, but rather how flexible you are and how good you are at identifying high quality setup. After you trade for many years, you have a good sense of, hey, this setup is likely to play out. That's why I got to be a little bit more patient. I need to give it enough time to actually develop. So I'll give you another example. So let's see what's the outcome on this one. So this actually turns out well. So let's find a better example. A better example would be something like this. You get into a long position, assuming you get into a position right here. All right, let's say you shorted here, expecting more bearish continuation move. Price runs down beautifully, run for about 4R. You were expecting price to fall a lot more, so you didn't close the position, you let full position run. And guess what? When price actually pulls back to these 108.30, you decided to say, hey, I want to scale in. What's the reasoning behind it? Maybe you say, hey, we have a bearish engulfing candle, we're likely to continue. So guess what? You scale in here. So you have a same size scale in, and price immediately do things like this. So when price does this, so what happened to your equity, or what happens to a P&L? You can imagine from having a 4R to having a scale in between, to not managing a scale in, to allowing the position to run like this. So at this point, you probably have already lost 1R plus. Why? Because here you shorted 10 lots, for example, 10 lots. So when it pulls back, 2 positions are going to consume your profit. Hence, you have a negative on your P&L. So this is the worst way to actually scale in. So what is the proper way to actually scale into a trade? Is to utilize the inverse pyramid. So this is something that I learned from one of my previous courses, and I personally use it as well. It's very powerful. Inverse pyramid is just a term. It technically means when you are adding into a position, you can only add in smaller size. Alright, so let's say if your initial position is 10 lots, your scale in size can only be 5. I personally suggest you don't go beyond 50% of your first position. So if you scale in 10 lots here, if let's say you're really confident about the setup, don't be cocky enough to add in full size. Add in half the size, because once you add in half the size, your average price is still somewhere around here. It wouldn't go half your, because imagine if let's say you enter a price here, you enter a position here, that's because you realize that that is a good area of value. So if you add a scale in there, all of a sudden, where's your entry? In between. And now do you think your entry is still at a good area of value? It is not, right? It is not. So don't rush into a position if you clearly know that it's a high quality setup. Give it enough time, allow it to develop. That is one big thumb rule in my trading plan. Is I say, if I spot a high quality setup, I would not have the greed, the cockiness, the rush to actually force the setup. I will give it enough time. I will scale in small size. As price continues to move into my favor, I can stack more scale in positions. That's how I have previous these 6 figures day. Alright, you need to be able to identify, hey, I know this is a high quality setup, but I need to calm the hell down, and I need to know where is exactly a good timing, a good level, a good price to actually go in more size. Alright, so go back to our first point. This topic is all about the 3 key trades that will identify whether if you're a good trader or not. The first thing is win big when you're correct. This is such a this is something that a lot of traders overlook. They think, hey, Neil, as a trader, it's easy. I enter a position, then it either hits my stop loss or target. No. Alright, every time when I have that massive surge, a massive buff on my P&L, I usually caused by me spotting a high quality setup, and I was able to optimize it. I was able to maximize the potential of the setup by adding more size. The way you add in more size, this is a whole new topic. Scaling in is a completely different topic. I'll make sure I do a workshop on that one. But remember, don't rush your scale in, because the moment you rush your scale in, you're actually worsening your average price. Therefore, it is not at an area of value anymore. So remember, have the confidence to scale onto the position, but you need to have a system. You need to know exactly what you're doing. Don't add into a position because of hope. A lot of traders, their biggest problem is they have a good position, then the position all of a sudden pull all the way back. For example, if you look at the chart, maybe you take a short here, runs well, all of a sudden price pulls all the way back. When it pulls back, as a trader, as a human being, we have the tendency of revenge trading the market. And what is the best way to revenge trade the market is to add on more size, is to say, I'm going to be correct, I'm going to add on more size, even though you know it's not the best way to deal with it. A lot of times we know it's a wrong thing to do, but why do we still do it? It's because it makes us feel good at that specific moment. So that is one problem that I struggle with a lot. A lot of times when I have a losing position, I will add on to the loser. This is something that, especially my first and second year, I did it a lot, very often. So please don't do that. Only add on to a position when you're correct, and make sure you add size to a good setup to optimize, to maximize the profit. So go to second point. We don't need to chart anymore. Win rate is a trash. So this is such a myth. A lot of new traders, they tend to think, hey, a good trader, we have 70% win rate, 80% win rate. So I know I talk about this topic a lot, but if you're really a good trader, if you really go out there and study the really good price action trader, discretionary trader, the retail trader, let's not talk about the institutional trader, the giant hedge fund companies, because they are all using robot trading. They are using algorithm trading. They don't trade discretionary like us, because imagine if you have $1 billion capital at stake, would you trust someone like us trading the SNR, trading the double top? You wouldn't. So it's a complete different game. But for us as a retail trader, as a price action trader, don't bother about win rate, because the worst thing you can ever do is to say, I want to be correct. Win rate is such an overrated aspect in trading. You don't need a high win rate to actually become profitable. Like myself, my win rate is always about 50%, the max. Sometimes it goes 55% on certain month, but on most occasion, my win rate is around 45 to 55%, which is very good, because a lot of times I know, yes, my win, as long as I'm able to maintain my win rate around 45 to 50%, I will be extremely profitable. This is coming from me. I have the experience of flipping my account, doubling, tripling, quadruple my account within a year. So I have the ability to do that. But why do I play safe right now? Is because as the capital grows, as I have more responsibility, I'm a father right now, I cannot risk as I used to. So condition changes, lifestyle changes. That's why things will change. So remember, don't focus on the win rate. If you're a trader right now, maybe you are not profitable, you are inconsistent in your performance, but then you start digging into your win rate and say, hey, the main reason why I'm not profitable is because my win rate is low. Don't put the blame onto the win rate. If you really go back to the journal, if you really study your trade histories, you'll be able to identify, hey, the main reason why I was not profitable, if your Sharpe ratio, if your profit factor is negative, is because every time when a good setup appears itself, every time when there's high quality setup, you either don't have the patience or confidence to hold on to the position, or you always aim for a small target. I'm not saying that aiming for a small target is wrong. I'll give you one example. If the market is in a range, like, let me find an example. If the market is doing things like this, zigzag, 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 these kind of market conditions are perfect to have a small target. But when you clearly knew that the market is reversing, or if the market is moving in a nice trending condition like this one, you got to have the patience to hold on to the position. Because if the way you say is, I'm a day trader, that's why I shouldn't have a big target, That's not valid. All right, I'm a day trader as well. There are times I'm willing to swing a position because I know it has a lot of potential. I don't mind doing that. Sometimes it might mean that I'll sacrifice a lot of profit. I'll give back a lot of floating P&L, but it doesn't matter. Trading is all about probability and possibility. No one can perfectly trade the market. No one can perfectly trade every single setup. There are times where I mess up certain setups, but it doesn't matter. Mistakes made. I've said a lot of times, mistakes made. Study them, write them down, move on. That's it. Don't dwell into one losing trade. Right? And that goes to our third point. Remember, first point, win big when correct. Second point, win rate is trash. And third point is don't get upset by losses. And yet be grateful that these losses will humble you. As a profitable trader myself, I do have times where I manually mess up a setup. These are things that I always share with all of you in the community. Sometimes I have a position that runs for 4-5 hours, but because I was being greedy, but because I was overly anticipating or overly predicting the market, I want the market to actually break certain SNR level that I choose to hold full size. And guess what? When things start going against me, all of you can bet that the position completely goes south. I still find myself doing this once in a very long time. Of course, right now it's easy to say because I already have the consistency, I already have the discipline to actually trade profitably. But back then, trading was so difficult for me because I would be constantly having a good position, not closing them, only to see price reverse into my stop loss, going to 3R, 4R reverse against me. So every time when you make losses like this, I always say, be like a problem solver, be a specialist. You identify a problem, you make a loss. It's fine to temporarily take a step back and take things a little bit slower. You don't need to say, oh, I take a losses right now, I need to get back into the market. The market is always here. That's one thing people just don't seem to understand. The market will always be here. Taking a day off, taking a week off, taking a month off will not affect anything. So if you are someone who have the tunnel vision, if you're someone who really focus on 5 to 10 years ahead, like myself, I don't see trading as a short-term get-rich-quick scheme. I see trading as something that gives me the ultimate lifestyle and also the ultimate retirement. So if you happen to have a losing streak, if you make bad mistakes, if you have a few losses, don't get upset. Be humble. Be happy the fact that these losses appear right now, early in your trading, before it goes too deep. Alright, sometimes if you realize, hey, why am I in a losing streak? If you really study them, you realize a lot of times it's actually just you repeatedly making the same bad habits or same bad mistakes. Like myself, when I go back to my journal on my first and second year, a lot of my losses would be I losing a trade, I losing the second trade, having the buys, that's what we call confirmation buys, then I just keep revenge trading the market. It's actually not me being a bad trader. It was just me unable to manage my emotion. Therefore, every time when I run on it, 1 loss, 2 loss, it will eventually go deeper and deeper because I was just constantly revenge trading the market. The first loss was well deserved. I was following my plan, so it has nothing wrong. The second loss is usually where I was having that kind of confirmation buys on the first position. So when I take a loss, I have the urge to actually revenge trade the market. Third, fourth, fifth loss on the same day are usually just me spamming my mouse, clicking the keyboard, just revenge trading the market. So the main reason why you're upset about these small losses, these small hiccups or obstacles is because you have not gone there yet. Once you are like, I don't say I'm a good example. I'm not that successful yet, because my terms of a successful trader is once you get to 8 figures. So I'm not at 8 figures yet. I would not be pretending like an 8 figures trader. I'm only a 7 figures trader. So once you get to the 8 figures level, and when you start looking back at all these memories, all these bad trades, you wouldn't get upset by them anymore. Trust me. You'll say, hey, how dumb I was to actually make these kind of losses. And the other day, if you all remember, I took a loss on gold. I got wiped off by the slippage. If some of you have not watched the video, I'll try to highlight it somewhere else. So that day when I lost in total about 11 or 12,000 on gold, and it's just a matter of split seconds. At that losses, I go back to study them. It actually happened within 30 seconds. I think within 30 seconds, I lost about 11 to 12,000. So I told all of you, when I made the 11 to 12,000 losses, do you see me being upset? I don't. What I did, again, I leave my desk, I go to my bedroom, I lie down there for about 5 minutes, calm myself down, I come back to do my journal. That's it. Do you think I'm a robot being able to not get upset by 12,000 losses? 12,000 is a lot to me. Do you think at this level I will say, oh, 12,000 is very little? 12,000 is bloody a lot. But the fact is this, I know what differentiates a successful and a failing trader is the way they see losses. When I make a loss, I'll tell myself one thing. If I don't calm down, if I don't manage my emotion well, this is going to be a lot uglier. So if you start thinking in terms of the negative side, you will say, hey, maybe 12,000 is just a good lesson. It's not that bad, right? At least I don't blow up 10%, 20% of my capital. 12,000 was relatively, I was trading a 300k account at that point. So 12,000 is about 3-4R. But it wasn't that bad. It's not bad enough to actually cause me any sort of damage, to cause me unable to trade well or whatever. And guess what? The next day and the following day, I actually made back all the losses and double or triple the losses. So what I want all of you to understand from this workshop is, if your goal is to really become 6, 7, 8 figures trader, like myself, my goal is still the same. I want to become 8 figures trader. Don't get upset by short-term results. It's easier said to be done. I know some of you might say, hey, it's easy to say because you've made it, but I'm not profitable yet. The main reason I was able to become where am I at right now is because of these small little mindset twists. When I was unprofitable, do you think I was positive? I was forced to be positive, because if I wasn't able to be positive when I was unprofitable, then how would I be profitable? When I was losing money like hell, do you think I'm a Superman? I'm a market wizard. I don't have any sort of emotions. I was once in debt for 6 figures. I told all of you, I was in debt for 6 figures. So the main reason why I was able to remain positive, I was able to continue striving in the market, I was able to master this business, this skill set, it was because of pure will and pure perseverance. I know I have to do it. If I want to change my condition many years ago, I need to focus on trading. I need to make things work. I don't have any plan B. I don't have any backup plan. I quit my job. I borrowed money. I went in debt. I went all into trading. I don't have such thing as plan B. Unless when you're in a position you need to have scenario A, B, C, D. But when you are choosing your path, when you're choosing a career, don't give yourself a backup plan. Because when you have a backup plan, guess what? You'll slack off. You'll find an excuse. right? And excuses is the worst enemy to your success. So if your goal is to become a really successful trader, tell yourself, I either become a successful trader or I become a failing trader. No other way around, right? So in that way, every day when you wake up, you have the tunnel vision and say, my goal is to become a successful trader. That's it. I will become a successful trader. Have that kind of positive self-talk, have the confidence, have the vow, and tell yourself, within 3 years, I will become a successful trader. Within 3 years, I will be living that kind of lifestyle that I aspire to have, that I envy other people to have. Within 3 years, I will make sure to change the quality of lifestyle of my parents, of my loved ones. Within 3 years, I'll achieve financial freedom. I'll achieve time and location freedom. So that's it for the workshop. I hope all of you learned something new. And yeah, let me know your thoughts, and I'll talk to you later. Bye bye.